Welcome back. Apple Pay gets a major boost in Canada after entering a partnership with 3 of the country's largest banks. Now, Bank of Montreal, Bank of Nova Scotia, and TD Bank are all launching support for Apple Pay, giving customers special access to the platform's digital wallet. Joining us right now is ConnectOne Bank Chairman and CEO Frank Sorrentino. Frank, it's good to see you.
Good to see you, Marie.
Thanks so much for joining us.
Thank you.
Apple Pay, digital in general, technology, how are you using it at ConnectOne, and characterize what we're seeing out there? Is this where things are going?
Yeah, so the whole banking space, there's a big movement towards better and more sophisticated payment systems, right? If you think about your credit card, it's a 1950s piece of plastic with a piece of 8-track tape glued to the back, and your data is stored there.
That's
certainly not the way of the future. That doesn't lend itself to a lot of things that the fintech space would like, and as clients, as you want, right? The convenience. You want lots of things on your cell phone. You want to be able to use it as your payment source. So whether it's Apple Pay or Android Pay or Samsung Pay or any other, there's lots of other things that are coming to the fore. I think this is the future. You will store your electronic information probably on your cell phone, and that will be your wallet.
But with that convenience comes added worry about security.
Of course.
What are you doing to make sure people feel that, you know, their personal information is not going to get hacked?
Well, this is something that, you know, consumers are going to have to really step up and think a lot about. We don't think, as a population, we don't think really well about information that we're willing to give online. If you go on anybody's Facebook page, LinkedIn page, Twitter account, I can learn so much information about you, and probably be it would be easy for me to hack into your account and answer those, you know, 3 security questions. You know, what was your school's mascot or whatever? You probably have that online. People need to be thinking about the information that they put online, how secure it is. I think the technology companies are doing a great job of increasing security, but it does also fall back on us, right? We have to be careful about what information we put out online, and that we safeguard our own information. We spend a lot of time and effort at ConnectOne Bank to educate our clients to say, hey, you know, some of this responsibility falls on you as well. It doesn't all fall on the bank.
Yeah. Well, from what I understand, this relies on an encrypted technology, essentially, where, you know, the people who are using your credit card don't actually ever see the number. Isn't that accurate?
So yes, so that part of the technology is great, but, you know, then somebody hands the phone to you and says, here, you know, I put my fingerprint on it, I unlock it, and I give it to you, so you can go tweet somebody, and now you have access to the phone. Or worse than that, you take the phone, you go into your local Starbucks, and you start searching your bank account, your credit card information on the open Wi-Fi in a public place.
Yeah, that's right.
And so now someone has all your data.
And you're agnostic to platform, right? Whether it's Apple Pay or whether it's PayPal, Venmo, whatever it is, you guys are agnostic to it.
We're agnostic to it. I think the client ultimately is going to be agnostic to it. They're going to go like water. They're going to go to the easiest place, right? So if you like Apple products, you'll go to Apple Pay. If you like Android products, you'll go to Android Pay. The vendors and the merchants, they're going to have to take everything.
But you just said something that's really important. I don't want to miss it, because you said, you know, you go into the ladies' room and you start, you know, searching all your stuff, and you're using their Wi-Fi.
Yeah.
So should we not be using a public place's Wi-Fi?
Absolutely not.
Never.
You should never. You should look. If you want to just go on social media in a public place, that's great. You want to check the New York Times.
Like,
you
what
want
about
to
the
check Fox
airlines?
News.
You go on a plane, they say, oh, we have Wi-Fi.
Well, but that's not a public place, so you need access to that. So that's a little bit different. Or even in your own hotel room is a little bit different.
Okay.
Still heightened security concerns.
But the airport is airport itself is unsecured.
I want to ask a question about cost, though, because there's a lot of fees associated, right? So you already have a fee for the merchants when it comes to credit cards, and then there's going to be the added fees with the Apple Pay. Who absorbs that cost, and are consumers going to be willing to pay these added fees?
Well, ultimately, the consumer is going to pay it, right? Either in higher prices for products, or, you know, in the interchange fee that is going to be applied. And, you know, we saw it in banking, right? In banking, nobody wants to pay a fee for anything, right? Everything's free, right? Your checking account's free, all your account open, everything's free.
Wait, it's not?
And but someone's paying for that, right? It's being that cost is being absorbed somewhere. I think we're going to see the same transformation in the digital space. It's going to start out as a more free environment, but you're going to see there are certain products that are charging $5 a month.
You have to monetize it somehow.
Absolutely.
Yeah. New banking regulations are putting pressure on those free checking accounts and what have you. I mean, the banks are, regulatory compliance is unbelievable right now in the age of...
Well, I mean, look what happened in Dodd-Frank, right? right, with the interchange fee. So they just arbitrarily changed what the interchange fee, that's the amount of cost that it takes for each credit card transaction. So if you're a bank over $10 billion, they put a cap on what they can make as a percentage. I mean, that's ridiculous. There's fraud prevention, there's cost, there's expenses. Those things change. They go up over time. We shouldn't have an arbitrary cap.
We've been talking about this on the show for a couple of months now, that President Obama looks like he's going to ramp up the regulation in the next 6 months before he steps down. I mean, you know, he blasted Donald Trump yesterday for proposing to dismantle Dodd-Frank, saying strict Wall Street regulations are necessary to keep the economy from falling back into recession. Listen to this. Got to get your take.
The Republican nominee for president has already said he'd dismantle all these rules that we passed. That is crazy. Have we... No, look. I mean, sometimes, I'll be honest with you, sometimes I just don't get it. How it is that somebody could propose that we weaken regulations on Wall Street. Have we really forgotten what just happened 8 years ago?
So is it crazy or what?
So, well, it really all depends on your point of view, but, you know, Dodd-Frank was written sort of to close the door, you know, the barn door after the horse left, and number one. And number two, it actually looked to solve problems that didn't really start at banks, right? These were non-banks that had all the issues in the financial crisis. And so everything that wound up in Dodd-Frank, and by the way, all the rules still haven't been written.
50% has not been implemented.
And at last count, I think it's a 20-something inch, you know, pile of paper for the rules that have been written. They're chasing their solutions, looking for problems in some cases, and there's certainly, as we've seen today, there's been a dampening in the availability of credit for certain types of individuals. So while I wouldn't be for no regulation, we definitely want a regulated financial system. I think there's going to be parts of Dodd-Frank that we're going to see over time are going to have to be rewritten.
Yeah.
Just quick point on Dodd-Frank, 22,000 pages of legislation that was just Band-Aid and bubblegum. You talk about arbitrarily impacting the fees.
I mean, look, the overall concept of it, okay, I get it, but you can go too far and you can actually hamper the economy. And I think we're seeing some of that.
Because we know how tough lending is, and we know that the economy has been sort of at a crawl in terms of growth. Frank, really good to see you.
Great to be here.
Thanks so much for joining us. Frank Sorrentino there.